Hello, folks. Hello. My name is Benjamin Z. Miller, and I am the managing director of a UK company that can pay you a long-term passive income. Our company offers a high-yield corporate income bond. We are Alamo Mortgage Holdings, and I'm going to answer the question, what are mortgage-backed securities in the UK context? So I'm not going to talk so much about the United States. I'm going to talk about the United Kingdom. And why do better educated UK investors seem to prefer Alamo Mortgage Holdings bonds? What makes our bonds more attractive to the better educated UK investors? Well, good question. First, please don't forget to like and subscribe for more content just like this video. So the answer is mortgage-backed securities in the UK context, while sharing some similarities with their US counterparts, have distinct characteristics and roles within the financial market. Here's a detailed exploration from a UK perspective. First, you have the definition and the UK market context. Mortgage-backed securities are financial instruments that are backed by a pool of mortgages. They offer investors periodic income streams from mortgage payments. In the UK, the mortgage-backed securities market is less prominent compared to the US, but it still plays a significant role in the financial system. There are several different types of mortgage-backed securities in the UK. There's the residential mortgage-backed securities, often abbreviated RMBS. These are backed by residential mortgages. They are the most common type in the United Kingdom. There's commercial MBS, abbreviated CMBS, and these are backed by commercial property loans. These are less common, but they're present also in the UK market. With regards to the creation and the issuance process, mortgage lenders and banks and building societies, they originate the underlying mortgage loans. And then these are securitized. These financial institutions then pool these mortgages and create mortgage-backed securities, which are ultimately sold to investors. So investors and the UK market. So institutional investors such as pension funds, insurance companies, and investment funds, these are the main investors in the mortgage-backed securities in the UK. There's often a liquidity provision where the mortgage-backed securities, they contribute to the liquidity of the UK mortgage market, enabling lenders to offer more mortgages. And then there's risk factors in the UK context. There's credit risk. This is the risk of default on the underlying mortgages. The UK's strict lending standards somewhat mitigate this risk. There's also a prepayment risk, which would be the risk associated with the early repayment of mortgages, which can affect returns. And then there's the interest rate risk. Mortgage-backed securities are sensitive to changes in the Bank of England's interest rates. There's also the issue of yield and performance, comparative yield. UK mortgage-backed securities generally offer higher yields than government bonds with a risk profile that is typically lower than corporate bonds. Market dynamics, the performance is actually influenced by the UK housing market, the interest rates, and economic factors. Now, if you look at the role of mortgage-backed securities in the UK financial system, let's talk about the 2008 financial crisis impact. The UK mortgage-backed securities market was affected during the global financial crisis, though the impact was far less severe compared to the US. There was a regulatory response post-crisis where the UK implemented stricter regulatory oversight to enhance the stability of the financial market. The regulatory environment with the FCA and the PRA oversight, the Financial Conduct Authority and the Prudential Regulation Authority, they regulate the issuance of mortgage-backed securities in the UK. The transparency and the reporting, the enhanced requirements, there's enhanced requirements for transparency and reporting that have been established to protect investors. There's a lot of investment considerations, and one of the nice things about working with Alamo Mortgage Holdings is when you get our annual investment program, You can build to the level of passive income that you want. And you have the security of the fact that our mortgage-backed bonds are based on real estate assets. So it's not like a lot of these high-yield bonds that aren't backed by anything. I encourage you to reach out to our company. We love to hear from new people. Just go to our website, www.alamomortgageholdings.com, and fill out the contact form, or email me, ben.miller@alamomortgageholdings.co.uk. I hope that helps, and I wish you good luck with your investing.